Hey everybody, back with another dividend analysis, and today we're going to be looking at Xerox Holdings Corporation, or XRX. Wanted to take a look at Xerox because their ticker's been really beaten up over the past few months, and just trying to see if we can find a good yield at a good deal. Speaking of their yield, we'll start with that. Currently they are paying out at about 5%, not too bad, doing about 3 times the wide market, what you'd be getting from the S&P 500, so pretty good there. Looking back at their dividend history, we actually have quite a bit of data. We can see that when the dot-com bubble burst, they did suspend their dividend and kept it suspended for 6 years until 2007. Now, from 2007 until today in 2021, they have raised their dividend quite nicely, starting at 4 cents. Now we're getting about 25 cents. That's about a 5 times increase. Very nice there. However, one thing to note is that the increases were very small and really only a couple of them happening in 2013 and 2014, 2015, 2016. Then in 2017, they shot up that dividend to about 25 cents, where it's stayed ever since. So there has been appreciation in terms of the dividend here, but it has not been consistent, is a good way to put it. They were very small raises of about a penny, then it almost quadrupled. Actually, it did quadruple in just one payment to the next. So that's something to be careful of. It's not very consistent, and when you are looking at appreciation, that consistency is what's important. But it is increasing over the last 13 years, and they were able to maintain that dividend through the financial crisis and through 2020, so those are good things to note. Heading over to the numbers, we can see that they paid out $223 million in dividends last year, and we will see if they were able to support that. Starting with their cash flow, we can see that they did $607 million in free cash flow over the last 4 quarters, and if we do our calculations there, we can see that they've paid out about 37% of their cash flow as dividends. Very good number there, right around a third, well below our ideal range of 50% payout. Very nice there. Even if they lost some free cash flow, they'd still be able to pay that dividend. Very nice. If we actually look back at the free cash flow over the past 5 and 10 years, we do see a bit of an issue. Their free cash flow has decreased substantially over the last decade, from about $1.3 billion down to less than half that at $600 million. That is a little concerning. Now, Xerox, they are not what they used to be. They have competitors. There are other names in their business. The company has been shrinking, as we can see there. So if I was looking at this, I'd really want to see how much of this is because they've sold off things. Is the company smaller than it was? Are their numbers just down? Things like that. Be sure you know why this cash flow is going down. Are people just buying less of their products, or do they have a smaller company because they've spun off things like that? But seeing this much of a drop is something to be concerned about, so keep that in mind. Heading over to the income, we can see that their net income last 4 quarters was just under $300 million, and doing our calculations there gives us a payout ratio of right at 75%, just at what we would consider our acceptable line. So there's not a lot of wiggle room here. If that income drops any more, they're going to have a real tough time paying that dividend. Now, what's odd about their income here is it's much more spotty than the free cash flow. It is down quite substantially, really, down to about 25-ish% of what it was. However, it's been bouncing around quite oddly. We go from $1.25 billion down to, $7 billion, down to negative $500 million. Then we go back up to positive $500 million, $1 billion. It's really all over the place. It's really hard to gauge just how their income's working. Why are they having these big spikes? Are there big write-offs? Things like that. You really want to look deep into this income statement, go through the 10K. Why is their income so spotty like this? If they are going to continue on this downward trend, any lower than this, and we're really going to be eating into our ability to pay out that dividend. Now, if they can bounce back up to, $500 million to $1 billion, that's great. We're going to be paying out, less than half of our income as a dividend. But unless we get those numbers, it's really a little spotty. So how are they making, or really not making, money? Most people know what Xerox does. They make printers, copiers, associated technology, and they provide services for that technology. That's really all they do. They're really just that business segment. There are a lot of competitors now, and the fact that a lot of people just don't use printers as much as they used to with how digital storage works nowadays, stuff like that. People just print out less things. However, with work from home being such a big thing, with the way that offices are being restructured, maybe that'll change. Will it be positive? Will it be negative? That remains to be seen, but that is something you want to keep an eye on. Now, is Xerox something you want to hold as a dividend investor? It's really tough to say. From the appreciation standpoint, I really don't think there's anything here. As we look back over their dividend history, they have not had an increase since 2017, and with their income and their free cash flow decreasing, I would be very, very surprised if they raise their dividend. So if you are on the appreciation side, the ship has sailed for this ticker. Don't worry about it. From the income side, it's very tricky. At face value, I'd really say no, just because of those free cash flow and their income numbers. But what I would, if I was interested in this company, what I would really want to do is look at management and look at what their plans for the future are. Do they have a roadmap for how they want to change the business? Are there things they're looking at? Are they really just going to stick with their old business model of we sell printers and copiers and the services for them? Or are they thinking about introducing new products, new services? Are they thinking about, maybe buying smaller companies that do things that are related to that, but that are somewhat different? Are they thinking about 3D printing and stuff like that? I'd really want to look in to see what their future ideas are, because if they're just going to keep doing the same thing has not been working for them, as we can see just by their cash flow numbers decreasing, by their income numbers decreasing. They can't keep doing this and expect to stay profitable, expect to be able to pay that dividend. So I'd really, if I was interested in this from a dividend standpoint, I would really delve into the company. What's management saying? What does the 10K say? What are they saying in their quarterly reports? Things like that. If it looks good, if they have ideas for the future that seem, plausible, this might be something of a turnaround that happens to have a dividend. It could be something where you're getting a dividend from something that also is going to, pop because it has some new technology that it's introducing, or they have something new about them that they're going to be able to get out there. Otherwise, I'd really tend to pass on this. If you're looking for a similar company, you could look at something like HP that does printers, that's really the leader in printers, and they're a cash flow machine that's able to pay a somewhat smaller dividend, but is really able to pay it. There is no worry about that dividend in the near future. So I hope that helps, and thanks for watching.